Hello, trading has closed on February 6th, 2025. As always, we'll begin with our disclaimer, go over our calls, and then make our predictions. It's my trading plan for Friday, which is February 7th, 2025. Remember, my plans can change. My plans can be wrong. Trade at your own risk. Also, I'm recording this before evening futures have opened. Look for the pattern with the early high, which is this. Tends to be a rally day with a high and a fine low, and we got that. But instead of rallying all day, we said the pattern tended to be irregular, and I think that drop qualifies as irregular. This is just a review of what we said, and tomorrow's pattern has the early low. Now we had a target, 6,046.70. We said unless we gapped up smartly, it should print. We gapped up smartly. The number remains on the table, but not the time. Doesn't mean it won't print, just means we can't say it had to print today. We actually came close enough. This is within 13 cents of the low. Low was 6,046.83. That's close enough to satisfy it. It doesn't really have to print, but almost every time it will print anyway. And when it prints, the support usually found under the number will already have been used up. So I wouldn't count on support if this number is seen again. When you have a direct hit, you tend to have a big move in the other direction, but by the time you know it's going to be a direct hit and that number's going to stick within a small range, it's often too late to take advantage of the pattern. We got the market had capped up early today. MEJT said ultimately lower prices were coming. That's enough to satisfy it, but often you get more than which is what you need, and that's what happened. While we're collapsing here, MEJT said it wouldn't stick. We're going to overtake this high, which we did. So that's played out. That's resistance. A wall into the close with resistance. These don't have to gap down, but if that's a false move, and very often a wall's a false move, we're going to gap under this low. Doesn't have to happen, but it happens often enough. Well, we still think we're in a fourth wave of some degree, and it hasn't completed yet. Current wave probably isn't over. Yesterday's count was killed. We have to find some other count. Well, we had this count with A ending here, and all that's necessary to make it work is to change this from a 5-wave structure into a 3-wave structure and have red A end here. So if you do that, you call this ABC and A ends here, you can then have in blue an ABC. And you can see how, if we stop here, blue C and blue A are going to be equal. So this could be the end of red B if we stop here. Well, this is the longer term picture. We had this A, we had this B, trying to find a way to count C. So, if we have A ending here instead of here, we have an ABC. And that works. Now, at the low we've seen so far, green C is equal to 0.786 times green A. It would be equal to green A here at 58.64 and change. What if we stop right here? And what if green C is equal to green A at 58.64 and change? I mean, if we stop here and if we hit the original target, red C of green C and red A of green C, we'd have a nice Fibonacci relationship. It would be 78.6%. Other things might work too, but if we hit around, if we stop here, we could easily drop to 58.64 area. Hasn't happened yet, and if we move up here, then just get your erasers out. But if we stop here, and we very well could, that's what might lie in store. Well, Friday's pattern has the really low, which doesn't tell us where we open. The non-farm payroll report comes out before they open. I can't predict the response to major economic reports with a sufficient degree of accuracy. We still have an impulse down, which is here, and a corrective wave up. The optional MEJT target's not required to print, but almost always will. There's a valid wave count, which has us stopping right at today's high, and the wall into the close often is followed by gapping down. So at some point, we should have a fine leg down to complete the current consolidation, following which the bull market's going to continue. Now, other people's work using totally different methodologies suggests we could hit a bottom in early March. Timing isn't really my thing, but that's what they say. So we have the economic report coming out tomorrow, non-farm payrolls. Tends to be a big mover. I don't try to guess. But if we do stop here, we have a reasonable target over 200 handles lower, and it might take almost a month to get there. It's a possibility. It certainly isn't the only one. But it is the pattern with the early low. And that's today's call.